Hey guys, Akil Stokes here, co-founder and trading coach over at tier1trading.com, and thank you for joining me once again for another weekend trading edge video. What we do in these videos typically is I share a few of my top 3 trading ideas on my radar for the week ahead, and of course give you some type of trading related message that's going to help push you along the path of becoming an independent, consistently profitable trader. Now before we get started, do me a favor, if you like these videos, hit that like button, subscribe if you're new. I do a lot here on YouTube, and trust me, you don't want to miss it. So before we hop into the trading ideas today, I got 2 things I want to talk about. One, I do want to share a few how my trading year has started, right? Some stats from the month of January. I'll probably do that a little bit later. But first, I want to start off by sharing with you another great message that I got, and that is we have another trader that has just been funded, a 150K account, and always love hearing stories like this, especially after last week's video talking about some of the myths and some of the pitfalls that traders get into when looking or thinking about becoming funded. So it's pretty cool to hear that. Now, I'd love to share with you the whole story of this trader. I don't want to make this video too long, but for you guys that are thinking that he just came in and got funded right away, think again. He's been working with us for 3 years. It took him about 110 days to finally pass his challenge, but he learned a lot of lessons on the way, and I'll probably do a podcast episode in the future to talk about that. But hats off. Those stories always make me smile, right? We've had traders funded in the past. We've had a few that have gone on to start hedge funds as well, but ever since 2020, things have just picked up, and we're not doing anything different here at Tier 1 Trading. We're teaching the same old stuff, but I think 2 things are happening. One, 2020 offered the opportunity to really go for it, right? Jobs were a mess. People were working from home. Maybe they were laid off. They had more free time. It was finally the excuse that they needed to really put their heads down and really attack their dreams instead of settling for comfort. So that's one thing. Another thing is, and I don't know the fancy term for this, but when people see others doing stuff, it gives them motivation that they can do it as well, right? So I'm a track coach, so the perfect example is Roger Bannister, right? He was the first one to run a mile in sub 4 minutes, and before that it was thought of as this like impossible feat. However, since running it, later that year, 3 more people broke it in the same race. And in the next 25 years, 200 people broke it. So it wasn't that it was impossible, but people thought it was an impossible feat. So they never actually went for it. And once they saw that, hey, this is doable, it gave them the confidence and motivation to do it themselves. And I think we're seeing the same thing with these funded traders, where a lot of people thought it was a myth. It can't happen. There's no light at the end of the tunnel. And as soon as we get a few people on the platform that are doing it, now they're motivated. Now they're talking to them. They're getting advice. Hey, what did you do? How did you handle this? How'd you do that? And they're helping others do it the same. So we've seen the amount of traders that have been funded just exponentially increase since that 2020, which is pretty cool. So wanted to share that good news with you because, again, this is kind of a diary for you guys that watch each and every week. You're hanging with me and following me on my trading journey. Let's hop into my 3 trades of the week, or my 3 best trading ideas of the week. And again, somewhere in there, I'll share some stats of January 2022 as well. All right. Let's hop in. So we're going to start here on dollar Canada for trade number 3. And of course, we're going to go 3, 2, 1. And dollar Canada has been a very active pair for me this year. We've done a lot of analysis in many different ways, a lot of harmonic patterns that were near misses, meaning they got close to getting filled and rolled over without us being involved. We had the head and shoulders as well. And this past week, we had the nice little live session talking about hybrid analysis, so combining fundamentals and technicals when we had the Bank of Canada rate statement and interest rate decision. By the way, if you missed it, we had a very nice conversation on fundamental trading and the pros and cons of it, some of the traps that traders get caught up into, kind of a general overview of the market on the Trader Coffee Break with Jason Greystone. So I'll throw a link in the description box so you can check that out. But also join us every Wednesday at 10 a.m. New York if you want to join us live for that conversation. It's kind of like water cooler talk where we just come and we take a topic, and it's not prepped or anything like that. We just have an inside the trader room type conversation. So it's pretty cool. We'd love it if you guys can join us for that. But dollar Canada, we're going to go back to the pattern well today. And what I'm looking at here on the daily chart is a potential cipher pattern, right? So we're coming up, we're retesting the right shoulder. That could be a trade in its own right. But we're going to keep it nice and simple. This pair has been good with advanced pattern formations lately. And we're going to identify a bearish cipher pattern. So Our cipher pattern is going to come in the form of a 5-point move, essentially, right? The X leg is going to be our first point, right? So the X to A leg, that's our first swing, our swing high to swing low. That's what we need to start off the pattern. Our next leg is going to be a retracement, right? We're going to call that our A to B. You should be able to see the little icons popping up on your screen. The extension down here is going to be a B to C leg, right? And if price retraces, as we're doing so far, up to the 786 Fibonacci retracement, taken from the A leg all the way to the C leg, that is going to give us a completed cipher pattern right here. So the D leg completes at 128.54. As always, right, we look at this as zones. I personally enter aggressively on advanced pattern formations, but the completion zone is going to be anywhere from this D leg to this X leg. Now, while we're on the subject, I got a question the other day, one of the social media outlets. You guys ask a lot of questions, and I love it. I believe it was Instagram, though. But someone, I guess, was in a pattern formation, or maybe they just had a question about it, and they said, Akil, what happens if price pushes up and touches the X leg? Should I just execute my trade? Execute, not execute, is like take it, but execute meaning get out of my trade. Should I just call it? And my answer was no, but it obviously is going to depend on your personal preference. My stops are well above the X, right? We talked about kind of non-smart stop losses and stuff like that. I think it's non-smart if you put it like a pip above the X leg. You got to give that wiggle room because smart money knows exactly where traders are placing stops and whatnot. So you don't want to get caught up in that. But you have two choices, right? If price violates X, you can do something called a graceful exit. You can do that for any trade. Basically, when your reason for trading is no longer valid, you get out and save a little bit of money. So if you can take a 10% or not 10%, a 10 pip loss versus a 20 pip loss, for example, then you save some money on what should be a losing trade. Or you can do like me and just see it out, right? I truly believe in my stop losses. My stop losses aren't random. They're in a very specific location for a very specific reason. And I'm comfortable with where my stop losses are. So when I enter a trade, aside from any active trade management, I'm in it until either my stop is hit or my targets are hit. And that's just the way I get down. Again, one way is not better than the other. What matters most importantly is you want to be consistent about it. So I thought it was a perfect excuse to touch on that. But dollar Canada, potential bear cipher pattern, 128.54. This is a sell if you guys are brand new. So we'll see if price action can push up and get this thing filled. Trade number 2, we're going to head over to the Euro Aussie. We're going to start here on the daily, but we're going to work our way down to the hourly chart. But as always, I just want to give you guys some perspective of what's going on here. And we ended the week with a higher high, higher close above this little consolidation zone, right? You can see this area where price has just been kind of bouncing back and forth and back and forth and back and forth, tested the highs recently, and we finally broke and closed above that, which means, right, identify a higher high, higher close, predict a move to the upside. The next step is to predict if we're going to move to the upside, where are we likely to move to? And there's two levels that stand out. There's going to be a minor level and a major level here for me. A minor level is going to be the tippity top of this candle right here, right? You'll see this a little bit more clearly as we go down to a lower time frames. The major level is going to be a retest of our next major level of structure resistance, which is up here around 61.50s, right? So we're currently trading at 159.50s, 200 pips of potential profit there. Now, let's go down to the 240, and really we're going to skip to the the hourly because that's where it really gets juicy for me. But you can see 240, a little bit of a 3-bar reversal here again. The interesting thing about trading is, right, there's no such thing in my opinion as kind of trend continuation analysis and counter trend trading analysis. It's just all analysis, and you kind of you take action on the decision based on what type of trader you are. But if I take these VS1 levels off for a little bit, that's the red and green boxes, support and resistance levels, you're going to see like a 3-bar reversal here, right? You're going to see price action push up. You're going to see a nice little inside bar right here. We don't have a lower low, lower close, but one can look at this as potentially a bearish signal. And what I always like to say is, right, and the reason I look at the higher time frames first is because I want to gain perspective. I just don't want to be caught up by the moment of like the individual candle or anything like that. I want to gain perspective on where the market's at, what the market is actually doing. And by being able to see that higher high, higher close on a higher time frame, that automatically eliminates, right, at least at the moment, any opportunity for me to go short. So I have no interest in any shorts, and it has nothing to do with this combination. You can look at this and be like, oh, this is beautiful, but it's more to do with the location. So location is always first for me. Now, by the way, it looks like we have a busted Gartley is here as well. Not that this has any relevance for the trade, but for you guys that think these things win all the time, you are wrong. Well, maybe your stop loss wasn't hit. I take that back. Maybe it's not busted. Maybe it's a good example of how the X leg could be tested and price can still come back down to win, as we talked about in the last example. But anyway, back to the trade that I want to talk about. And real quick, we'll go a little bit to the left. You can see, again, that's that minor zone I drew on the higher time frame. You can see how it looks a little bit clearer here. But what we have here on the 60, we go down to the hourly chart here, is, let's delete you, Mr. Gartley. We have a sideways channel. We have basically a high and tight flag, which is one of my favorite patterns to trade, right? So a high and tight flag is basically, it's like a normal flag pattern. You have a directional move, and then you have the market kind of channeling sideways. You can see there is a lot of indecision here, right? We go up, we go down, we go up, we go down, right? Look at the wicks, look at the legs. The market doesn't know what to do. It's a battle. Now, what gives me a bullish bias about this is not only the nature of the pattern formation, the flag pattern, but the location, right? Again, you can see that we violated our VS1, right? So we have a higher high, higher close, right? So each time the market pushes down, right, we're holding previous resistance, which is now acting as support, right? And my anticipation would be a break to the upside. So 3 ways to handle these breaks, right? And again, if we violate the lows of this channel, then that's gone. The trade setup is done. But there's 3 ways to handle this. One is you find a way to position yourself prior to the break. So as we're at the lower part of this channel, look for an entry reason down here, and you can get involved in anticipation of the breakout. That's going to give you the most potential reward. You're not really going to see a situation here on the 15, but let's say we go down to the 50, or on the 60. Let's say we go down to the 15, right? Maybe you get a higher high, higher close or something like that. Again, you don't want to, you want to make sure the 15-minute chart is in your realm of trading time frames you're supposed to be on, right? You can't just keep searching until you find something. That's a very bad habit. Will get you in a lot of trouble, but just giving different options there. So one is before, one is during. So an example of during would be like putting a buy stop right here. And as the market breaks out, boom, right? You reach a hand out, you grab on that train, and you hope to go for the ride. And another one is waiting for the confirmed breakout and then the retest, like a normal pullback trade, and then looking to catch the retest. And of course, there are many different ways to trade within these 3 type of ways, right? You can trade breakouts in a different way, you can trade pullbacks in a different way, but just to give you kind of an overall view on 3 ways to attack this market. So I like this trade. Maybe it should have been my number 1 because this is one of my favorite patterns to look at. But potential buying opportunity on the Euro Aussie 60-minute chart, high and tight flag. Keep it on your watch list. So January was a hot start for me, very similar to last year. Last year I started off the first 3 months on fire, then I kind of reverted to the mean a little bit. But every January isn't the same. And I think that's the cool thing about trading is, in my experience, and I've been doing this since 2007, I haven't been able to make any prediction on what months are going to be good, what months are going to be bad. You have stuff like the summer slowdowns and like December where everyone stops trading. But in general, I've been all over the place. I've had very hot starts to the year, like this year where I've had almost a 10% month in January, and last year was almost the same, I think. And then I've had years like, 3 years ago where I started off the first 6 weeks, worst trading drawdown of my life. So you never know. There is something that is in common if I were to make a correlation, however, and this just popped up on my Facebook memories. 6 years ago, I had a really good trading year, and I did a video, got off to a good start, and the video said that, wow, guys, what a phenomenal week of trading it's been thus far. Between Jason and myself, we have brought in 500 plus pips over the last 4 days, and well, as I was thinking about it, I was really trying to figure out why. Was it the news out of Greece earlier this week? No. Was it the FOMC minutes, the 8,000 word FOMC meeting minutes that came out yesterday? Probably not. And really, as I dug down deep, there was only one reason why we saw the type of positive movement that we did. It's got to be the beard. As you can see, the beard is growing out as well, and my trading is doing well. So maybe there's some type of a correlation there where the more I grow my beard, the more my trading account grows. I don't know, but we're going to keep it growing until we hit a drawdown. But anyway, good month. 10% month, almost a little bit below that. Hit at about 78%, which if you're new to the channel, I'm about a 55% trader, so I will revert to the mean at some point. But what you want to do is you want to take advantage of your hot streaks. That way, when those drawdowns come, you can absorb them, right? You don't need to run from them. You don't need to, system hop. You don't need to revenge trade, anything like that. If you've made your money on the front end, the drawdown's only going to take away a little bit of it, and then drawdowns are all about surviving them until you get to your next hot streak. Now, a few things I want to do different this year, which I track, but I typically don't share, is win percentage, because win percentage is talked about in a few different ways, right? There are three types of trades, or three types of outcomes of trades, right? We typically think of two, wins and losses. So we create our win percentage versus wins and losses. So 78% for me for this first month. But there's also scratch trades, which are important. And scratch trades are trades that are break-even trades. So I had a few of them as well. So trades where maybe you manage your risk and you get stopped out for break-even, or you cancel the position for break-even for whatever reason, maybe a news event, something like that. But trades that you take that don't yield any profit. And I think it's pretty cool to track those as well. I think we don't talk about it as much as traders, but that's a very important component, because many of those scratch trades, if they're done because of proper risk management, we're probably going to be losers. So, it's cool to see how many losers you avoided due to proper risk management. And I say proper risk management because you're just not doing it off of emotions. You're just not scared and you stop yourself out for break even. But the risk management tactics that you've implemented in your trading plan for a reason. So if we do that, I've got 7 wins, 2 losses, 2 scratches. That takes that win percentage down to about 64%. And you should be seeing a little pie chart in front of you right there. Another thing I want to track, because we talk about this a lot, is the difference between fixed pip position sizing and fixed percentage position sizing. I'm not going to get into a whole thing about that, but fixed percentage is risking the same percentage every single trade. So if you risk 2% every single trade, your position size is switching to meet that 2%. Fixed pip means you're trading a fixed position size. I probably should say fixed position, not fixed pip, but meaning you're trading 2 mini lots every trade, 4 mini lots every trade. Now that you still work within a risk profile ceiling, you still want to stay within, at least in my opinion when I do it, stay within 2%, but you're not jumping up and down and changing that position size from trade to trade. And again, probably confusing to a lot of people. If you're new, don't even worry about it. Worry how to trade first. You can worry about position sizing later. But if you're a little bit experienced, you're probably on one way or the other. You're probably like, Akil, that's super stupid. Or Akil, hey, I do that the other way, is super stupid. Here's what I would encourage you to do. I'm going to unlock a YouTube video from one of our recent workshops where we talked about the differences between fixed position and fixed percentage and how that works with our smooth ratio money management position sizing. And that's basically a position sizing strategy allows you to increase at a faster rate and make higher returns. But if you want to see that video, email me. I was going to unlock it here on YouTube, but I don't necessarily want to share it to everyone. But if you're someone that's interested in seeing that presentation, I think it's about an hour long, shoot me email. I'll shoot you a link. I'll unlock it so you can watch it. But it's a good presentation on money management, position sizing, all of that fun stuff. But I thought it'd be cool to see the comparison. Obviously, they're about the same right now. It's only been about 1 month, but it'll be cool to see as the year progresses how those change. Of course, if I remember to keep sharing it with you, which I often forget about halfway through the year. So that's an update on how my trading is. Again, email me if you want a link to that video, that presentation on money management and all that fun stuff. And let's hop into the #1 trading idea on my radar for the week ahead. Now, the #1 trade on my radar for the week is going to be the New Zealand Swiss. Again, I really like the Euro Aussie, but this is one we've been watching for a while and stalking in the live room. So it holds a special place in my heart. But this was an example of a breakout. So in the previous idea, we looked at a potential breakout. This was a breakout, right? We had consolidation down here. We broke out towards the lows. We've already got our first retest, right? Nice opportunities in here. But the market looks like it may offer us a second chance as well. and just to kind of go back on the analysis. Actually, I don't even need it. I was going to draw some fibs in and draw some other stuff in, but let's just keep it simple for today. You see this green box down here, right? Our VS1 identifying a previous level of structural support. This is where we're looking for price action to go. All right, so there is room to the downside. Again, if you want, you can draw in some Fibonacci's, AB equals CDs. There's a bunch of places you can do it. We'll keep this video short and not do it for you, but looking for a move down here. So what we're looking for as the week progresses, right? I believe we got it already. Let me just delete the VS1, right? We got what I call a fresh break, meaning that price action broke out. This is our first break. We retraced, and now we put in the new structure low, right? So a new structure low, if you've been following us for a while, allows us to reset our IPDE process. So now we can identify a new structure low, we can predict a continuation lower, right? And it all starts over. So what are we looking for? Well, we're looking for the same thing. We're looking for the next pullback opportunity. I know that this is a trade that is on my radar until we get to this lower level. Let me just reset my thing real quick. There we go. We know it is on my radar until we get to this lower level, right? Let's call it 59.60s, right? So what I'm looking for as I zoom in, and we'll go down to a lower time frame, is any opportunity at a pullback trade until we get to that 59.60s level, right? So if price may pull back or may extend a little bit, doesn't matter. Looking for a pullback. May extend a lot of it, doesn't matter. Looking for a pullback, right? We're looking for a pullback. That's a little bit of a looser pullback, but we're looking for pullbacks, or I'm looking for pullbacks until we get to that ultimate destination here. So a very nice setup, in my opinion. It's been a good trade already. May offer more opportunity to the downside. I don't see much standing in its way. So trade number one, New Zealand Swiss bearish continuation trade. Look for the pullback and make sure you guys look for more of my videos throughout the week. Live streams every Tuesday, Wednesday, and Thursday. Podcasts every Monday, Wednesday, and Friday. And of course, the weekend trading edge coming to you some point, depending how busy I am, during the weekend. Probably Sunday next week as well. All right, until next time, plan your trade, trade your plan. Take care.